Welcome to the Tidecrest 3's for November 2025. Each month, we spotlight 3 numbers impacting the capital markets, 3 news stories driving investor sentiment, all in under 3 minutes. Let's dive in. First, 25 basis points. That's the Fed funds rate cut. The federal funds rate was cut 25 basis points last week. This marks the second rate cut of the year aimed at supporting a cooling economy while managing inflation that remains above the Fed's 2% goal. Just a few weeks ago, the market was expecting another cut before year-end, but those hopes seem to be fading. Why it matters. The Fed funds rate sets the tone for borrowing costs and asset valuations, shaping everything from consumer credit to investor sentiment. Second, 4.3%. Unemployment rate. We think. The last official reading came in August, showing unemployment at 4.3%, the highest since the pandemic. We haven't seen updates for September or October because the government shutdown has halted data collection. Private estimates suggest job growth is still soft. We're essentially flying blind until the data resumes. Why it matters. Jobs power spending, and spending drives growth. Without reliable data, policymakers and investors are making decisions without a clear picture of the labor market. Third, 40%. The weighting of the top 10 companies in the S&P 500. The top 10 companies in the S&P 500 now make up about 40% of the index's total market cap, more than double their 17% share in 2015. This surge reflects the dominance of mega-cap tech firms whose growth has driven most of the market's gains. Why it matters. The broader market now moves largely with a handful of mega-cap names, reducing diversification and making volatility more pronounced when those leaders stumble. 3 news stories. Number 1, government shutdown continues. The federal government shutdown has reached its 34th day, just shy of the record 35-day closure from 2018 and 19. As it drags on, agencies are finding temporary workarounds, such as the U.S. Department of Agriculture using contingency funds to provide continued food support for low-income families. Why it matters. Each additional day without a funding agreement deepens economic uncertainty, delays critical data releases, and heightens pressure on lower-income households and financial markets alike. 2, big tech's AI spending raises market risks. Major tech companies are investing massive sums in AI infrastructure, creating what one hedge fund executive called a prisoner's dilemma. Each firm must spend heavily to stay competitive, even as future returns grow uncertain. Why it matters. Massive AI investment is reshaping capital flows and market leadership, making overall performance increasingly tied to a few dominant firms. 3, calculating tips prices. Because of the ongoing federal shutdown and the missing inflation data, the market for Treasury inflation-protected securities is facing a first-ever fallback methodology for calculating the inflation index. Why it matters. The disruption adds uncertainty to inflation expectations, pricing, and yields, which ripple into broader fixed income markets and investor behavior. That's the Tidecrest 3's for November. 3 numbers, 3 stories, and 3 minutes. We'll be back next month to track what matters most. Thanks for watching.